Hello, everyone. Good to have you here. I am Trish Regan, and as we wait on the Federal Reserve to announce that they're going to do whatever they can to manage this inflation thing, I just want you to appreciate the irony of the situation we're in. You have a Federal Reserve that is dealing with inflation, the likes of which we haven't seen since the early 80s. You got to go back 41 years. And yet you have an administration that is doing everything it can to increase that inflation by handing out $10,000 and $20,000 effectively checks to kids that took on loans that, well, let's be honest, maybe they shouldn't have. Hello, welcome to the program. It's so good to have you here. If you haven't already subscribed to the Apple podcast, the Trish Regan Show on Apple or Spotify, please do me the favor of doing that right now. Portions of today's program are brought to you by Legacy Precious Metals. There's never been a better time to invest in precious metals than now. So go to legacypminvestments.com for your free investing guide today. Again, legacypminvestments.com. We'll talk a little bit more about gold coming up in just a second. Also, Charlie Dombeck from KeyCity Capital is going to be on the show in just a little bit to talk about this IRS that is prepared for, quote unquote, deadly situations, and encourage IRS agents are encouraged to be able to carry a handgun, for goodness sakes, a weapon. Unbelievable. Anyway, before we turn to that, I do want to go back to what's happening. In just a short amount of time, we're going to find out that the Federal Reserve is going to tell us, like they always tell us, that they're committed to stopping inflation. Great. Glad to hear. Glad you guys finally actually realized it was a problem, right? Because you told us forever it was transitory. Well, how's that going to work when you have a White House that is clearly committed to just making sure that everybody's got more money in their pocket? And by the way, the kids that are getting this and the adults that are, I say kids, right? But let's keep in mind, 67% of all outstanding student debt, of which we have $1.7 trillion worth, more than we had in the subprime mortgage crisis, they're primarily under 40, right? So it's young people. It's young people that went to fancy schools and now they can't pay it back because, I don't know, they did like a gender study program and they find that they're not that employable other than maybe as a barista at Starbucks, which they don't want to work at anymore. You get the picture, right? So you have people that took out too much debt, and I think the government had a role in all that. I think this is a major industry, and they've created effectively this kind of wokeism amongst this younger generation through the university system. But these kids signed on the dotted line, and now they're not going to have to pay back. And who's going to get stuck paying this? American taxpayers, the people that are working so hard, that are dealing already with escalating gas prices. They're dealing with escalating food prices. And it's like you're rubbing salt in the wound here, guys. It's really pretty unbelievable. I mean, look, our long-term trajectory here is quite flawed. In fact, I would say that we're on the brink of a lot of fiscal problems, long-term fiscal problems. It's one of the reasons why I keep saying, gold is something you should look at as part of your portfolio. It's one of those vehicles that helps to weather out the volatility, weather the inflation. And I encourage you to give my friends over at Legacy Precious Metals, legacypminvestments.com a ring. Their number's 1-866-589-0560, 1-866-589-0560. There's a lot of stuff going on right now that's just not going to sit well with us for the future. So look at something like a gold-backed IRA, or look at actually having real cold hard cash, but in this case, gold is better than cash for many, many people. Anyway, take a look at it today and think about all that's happening. As we hear from our Federal Reserve, I don't have a ton of faith in him. I'm not convinced that Jerome Powell can really fix all this. In fact, I think we could be in for some really challenging times. The administration will like to say, but you know what? Second quarter GDP, it wasn't quite as bad as everybody originally thought. There's going to be so many revisions still to come. I'll tell you this, it's still negative. And we all know what 2 negative quarters in a row for GDP actually means. You can't say it, right? That's not allowed right now. Anyway, I sat down earlier with Charlie Dombeck, as I mentioned, from KeyCity Capital, and we talked about a lot of these things, including, by the way, that IRS. It is armed and dangerous, I guess. He had some advice in terms of how you can hopefully prevent yourself from actually being audited, and some thoughts on what's going on the student loan issue as well. Take a listen. Charlie Dombeck, KeyCity Capital, great to have you back here today. I mean, let me start first. We got a lot to talk about, by the way. We got the Fed, of course, coming out with their announcement in just a short time. But let's start here on what the federal government is doing in terms of this loan forgiveness. What is that going to mean for inflation?
Well, it's another big form of government stimulus. It's like the PPP loans, it's like the stimulus checks that came out during the pandemic. So it's another handout. And the problem is, although I'd love to help college students that are struggling to pay their debts right now, we have a massive problem in our economy with inflation and rising interest rates. And the Federal Reserve has to be aggressive with interest rate policy. And all of your leading economists are predicting that this handout is going to put more pressure on interest rates. It's going to put more pressure on rising inflation. And ultimately, it's going to create more problems for us in terms of market valuation and issues like that.
And
So,
they're kind of fighting each other.
yeah. So, on one hand, we have the Federal Reserve trying to control inflation. And on the other side, we have the Biden administration wanting to spend a lot more money. And it's troubling. And the only way that the Biden administration can collect any revenues, because they have been unsuccessful in making major changes to the Internal Revenue Code to raise taxes. They've been unsuccessful in raising marginal rates. So what are they doing? They're hiring 90,000 new IRS agents to scour Americans' 1040s for additional revenue. They're weaponizing the IRS, creating an army or a police force that are allowed to carry guns, by the way, and they're
I
designed.
know. I couldn't believe that. Not only are they allowed to, they like want them to be trained. I'm like,
Uh,
whoa, for deadly situations.
so, one of the things that I've always done as a practicing CPA is help clients stay away from those red flags and those forms that create high audit risk. Hasn't really been an issue in many years, but with the advent of this hiring boom, we're going to need to find ways to protect ourselves. And, most clients that I work with, they file and pay their taxes. They do everything they're supposed to do, but no one really wants to go through an audit. It's time consuming, it's expensive, and oftentimes it doesn't result in any changes. But what the IRS does is they publish a book called the IRS Data Book, right? And it lists all of the audit statistics for every form and every line item. And I am one of those rare accountants that read that thing every year, and there's certain things that you can do to reduce your chances of being selected for audit. And
Oh,
I have,
okay. All right. We're going to stop right there. We need to put like a graphic up or something. You're going to
yeah,
give us some advice on how to reduce your chances of being audited. What's the number one thing?
number one thing is I believe small businesses are going to be targeted as part of the IRS enforcement actions. They're a great target. They're going to find revenue there. There's one form, and we call it an audit magnet. It is Schedule C of your 1040. It's the form that sole proprietors use to report their income and expenses from self-employment. And you can very easily move that activity to a corporation or to a limited liability, an S corporation, and it's as much as a 4 or 5 fold reduction in audit exposure. So that's a big one. Um,
I
the
thought maybe the S corporation might have raised more eyebrows. I mean, don't
no,
forget Joe Biden, right? Everybody was like, what are you doing with the S corporation? You
yeah.
saved,
So
50
the
grand, but it was questionable.
So the biggest issue with S corporations is a lot of business owners don't pay themselves a reasonable salary through that structure. John Edwards, this former senator, used that to shelter millions of dollars from payroll taxation. But when you use that entity responsibly and you pay yourself a reasonable salary, that entity structure is audited less frequently. And a regular corporation, which now pays tax at only a 21% rate, thank you, Donald Trump, for that, made us much more competitive globally on the global tax landscape, that entity is audited even less frequently. And then for investors who have rental properties and things that would normally fall on Schedule E, if you have 10 or 20 rental properties, for example, you've got 10 or 20 schedules on Schedule E, that's a lot. It's a kind of a on the radar of the IRS. So I can move that to a partnership return, and you've got one line item now on the 1040. So it's called cleansing the 1040, reducing the number of line items, using proper business structures, not only for legal and tax benefits, but also to reduce your chances of being selected for audit.
No,
It's
it's
important.
important. Look,
Yeah.
I think the tough thing for people is once that happens, I mean, it's expensive, it's cumbersome. You're dealing with bureaucracy on steroids. And so people are fearful of this, Charlie.
Yeah, and what I would say too is the first thing that the IRS needs to invest in is better customer service. So if you think about the people who call in, oftentimes have to wait hours for answers, and then oftentimes it's very difficult for the IRS to even get your returns filed and processed. So certainly the IRS needs additional workforce for customer service agents to be able to give people and taxpayers
I don't know if
answers.
they need to be like, armed or,
No, I
or
don't think.
ready for deadly,
Yeah,
situations. That one kind of threw me.
yeah.
I mean, you don't think of the IRS as like, the CIA agent, but who knows?
Absolutely.
Yeah. All right. So I think it's an issue for people. They should check you out. KeyCityCapital.com. KeyCityCapital.com/Trish. My name, if you want to go there, or KeyCityCapital.com. You can call Charlie, maybe get some more advice on taxes. Let's turn to investing right now, because I think we're going to get an indication today that the Fed has no choice, right? They're going to move aggressively as they can. Question I really have is, I don't know if Jerome Powell's got it in him. Like, I think the guy's going to completely chicken out. You've got November coming up. And so my fear is they're not going to do what they need to do. You got all this stimulus coming courtesy of the Biden administration, and we're going to still be looking at more inflation.
Yeah, I mean, our inflation has tapered off from the highs, but they're still running at 40-year highs, right? So we're at 8.5%. And I really think the Federal Reserve has no choice but to substantially raise interest rates. If you look at where the markets are right now, we've had a little bit of a bear market recovery. I call it maybe a bear trap. I don't think the markets can sustain sort of the small recovery that we've had since we reached those all-time lows in the last couple of years. So I've got to believe, and I certainly hope, that Jerome Powell acts aggressively and attempts to get inflation under control. He's got an uphill battle, and the administration is not doing him any favors by giving out $20,000 checks for people who have student loan debt. It's an issue, and I think something that we have to address immediately. And I think we've got additional downward pressure in our markets. And in terms of investing, it's the same message: find stores of value. Rental real estate, an excellent asset class, energy, commodities, interest rate tied investments like asset-backed lending. And those are the strategies that we support. Those are the strategies that we sponsor, and people are doing really well. In fact, we've had so many people call in just recently because they've recovered some of their losses. They didn't want to sell at the bottom. They didn't want to reposition cash. We helped so many people back in the early parts of the year and in the end of 2021, and people are coming back now saying, look, I'm ready to make a move. I feel like I've recovered, and I don't want to feel like I'm going to lose more. And it's a great time to have a conversation about what you should be doing with your capital.
Let me ask you a question about that. I mean, everybody's different, right? Everybody has different priorities. Everybody's at a different stage in their life. So when you sit down with a new client, you talk about, I suspect, like their goals, when they want to retire, what they need, et cetera, also their tolerance for risk.
Absolutely. And what I tell people is the biggest mistake that people make over a career of work is they put all their money in stocks, bonds, mutual funds, and ETFs. And my most successful clients, certainly they have investments in those categories, but they also have investments in passive rental real estate. They also have investments in alternatives. And when you have a blend across those three buckets, you perform better. You often insulate yourself from market risk, and you level out the issues that happen in these major downturns, like we had in the subprime crisis, like we've had in this rolling crisis. And, what I see happening across America now is this competition amongst two different core philosophies. On the one hand, we have this socialist view where bigger government, more taxes, less public service, less focus
Bigger
on
IRS.
bigger IRS, higher taxes. Mm-hmm. On the other side, you have the fiscal conservatives that support lower taxes, private enterprise, less government, and a real focus on public safety. And what I find is that people are really voting with their feet. People are moving out of those jurisdictions that have those socialist viewpoints, and they're moving to the Sun Belt, into these states where we've been working for the last 4 or 5 years on building a portfolio of investment assets that everyone can participate in the success that's happened in those markets. And I don't see that changing anytime soon. We got a lot of runway left, not only with individuals and families moving to these jurisdictions, but major corporate moves that really create a 3 to 5 year runway. It's an excellent time to deploy capital in these states and these conservative jurisdictions where people are moving and companies are relocating to.
Well, people should check you out. I encourage them to do so. I'm telling everybody you're coming on this week, so hopefully they learned a little something. KeyCityCapital.com. Charlie Dombeck. Charlie, wonderful, as always, to see you. We appreciate the insight. Right. Again, my thanks to Charlie. Always great to have him here. Watch for the Fed today. We'll see how the market reacts to this. I mean, I think a lot of it is somewhat baked in, but we'll be looking for clues in terms of exactly what they tell us about how much they think they're going to need to do. Watch for that. Have a wonderful weekend. Have a wonderful weekend, everyone. Make sure you subscribe to the show, subscribe to the channel, and I'll see you right back here on Monday.